What is up guys, my name is Ignas, welcome back to the channel. Last week I bought some stock in Lockheed Martin, but now I'm starting to question that decision. Is LMT actually the best pick in the aerospace and defense industry right now? A month back, Greg Hayes, the CEO of a competitor Raytheon Technologies, went on CNBC to discuss their plans on making the company leaner by taking the work from home model as standard. This is what he said.
No, look, I think that what this pandemic has shown us in all honesty is that, you can be productive in varying work environments. I still think you have to be in the office occasionally. You have to build social capital. You have to build that team esprit de corps. But you don't have to have an hour commute every single day to be productive. So we're going to give our people flexibility. We've got 32 million square feet of office space across the enterprise today. Our goal is to get rid of about 25% of that to allow people to come to work when they need to. But if you don't need to be at work, if you can work remotely and work efficiently, that's just fine too. So we're going to give people flexibility, and that's going to help a lot in terms of retention as well. As I think about the goals that we have around diversity and trying to keep young women in the workforce, this type of flexibility is absolutely essential.
So by encouraging work from home, they will keep employees more motivated and productive, and by not having them at the office, they will be able to cut that spending off, since around 25% of that office space will not be used anymore. The effects of this transition will be more apparent going further, but today we may discuss which company could be a better pick looking into fundamentals. For the comparison, I have Boeing, ticker symbol BA, Raytheon Technologies, RTX, and Lockheed Martin, ticker LMT. In order to make the comparison possible, we will be looking into 8 different factors: analysts' price targets, forward price to earnings ratio, annual revenue growth, price to sales ratio, return on equity, last 4 quarterly earnings results, current ratio, and dividend yield. The best company under each factor will get a point, so it is possible to have from 0 to 8 points, and in the end the stock with the most points will be considered the winner of this comparison. I hope that the rules were clear, so let's begin. First factor are the analysts' price targets. As investors, we want to check how far the current share price is away from the average target of analysts. If the current price is under the average target, we will consider the stock as undervalued, and in the end, the stock with share price is furthest away from the average analyst target to the lower side gets a point for this factor. For Boeing, we have 23 price targets of analysts. They range from the lows of $200 to the highs of $314 per share. The average is at $267.52, and the current share price is at $236.68. This means that there is still around 13% room for the current price to reach the average target of analysts. For Raytheon Technologies, we have 17 price targets of analysts. They range from the lows of $87 to the highs of $108 per share. The average is at $98.18, and the current share price is at $86.70. This means that there is still around 13.2% room for the current price to reach the average target of analysts. For Lockheed Martin, there are 18 price targets of analysts. They range from the lows of $384 to the highs of $480 per share. The average is at $427.72, and the current share price is at $381.49. This means that there is around 12.1% room for the current price to reach the average target of analysts. Results for the analysts' price targets factor are in the table, and with most room for growth, Raytheon Technologies gets the first point. Second factor we have is the forward price to earnings ratio. It is calculated by taking the current share price and dividing it by the estimated future earnings per share. This is the standard price to earnings calculation, with the difference that earnings here are predicted by analysts. So in the end, the stock with the lowest forward price to earnings ratio gets a point for this factor. Boeing has a forward price to earnings at 43.35. Forward price to earnings for Raytheon is at 17.52, and Lockheed Martin has a forward price to earnings at 13.68. Forward price to earnings ratios are in the table, and with the lowest value, Lockheed Martin gets the first point. Third factor is the annual revenue growth. As investors want to find that the revenues of a company are on a steady increase. We will take a look into the 4 most recent years and compare them one by one. If revenue was on the increase from one year to the next, we will consider it as a +1, and if it was on the decrease, it will be a +0. Then we sum the results up to a minimum of 0 and a maximum of 3, and in the end, the stock with the highest sum gets a point for this factor. Annual revenues for Boeing, and going into 2018, there was an increase to $101 billion. Then into 2019 there was a decrease to 76 billion, and going into 2020 we had another decrease to $58 billion. So with one increase and two decreases in annual revenues, we get a sum of 1. Annual revenues for Raytheon, and going into 2018 there was a decrease to $34 billion US. Then into 2019 we had an increase to 45 billion, and going into 2020 there was another increase to $56 billion. So with one decrease and two increases in annual revenues, we get a sum of 2. Revenues for Lockheed Martin, and going into 2018 there was an increase to $53 billion US. Then into 2019 we had another increase to $59 billion, and going into 2020 there was an increase to $65 billion. So with 3 increases in annual revenues, we get a sum of 3. Results for the annual revenue growth factor are in the table, and with a sum of 3, Lockheed Martin gets another point. 4th factor is the price to sales ratio. It is calculated by taking the market cap and dividing it by the trailing 12 months worth of sales. The formula suggests to be looking for a company with a low market cap and a high result in sales. So in the end, the stock with the lowest price to sales ratio gets a point for this factor. Boeing has a price to sales at 2.48. Price to sales for Raytheon Technologies is at 2.17, and Lockheed Martin has a price to sales at 1.61. Price to sales ratios are in the table, and with the lowest value, Lockheed Martin gets another point. 5th factor is return on equity. It is calculated by taking the net income and dividing it by the shareholders' equity. A high ROE shows that the company is well managed and that money from investors are efficiently handled. So in the end, the stock with the highest return on equity percentage gets a point for this factor. For Boeing, the return on equity is currently not available. Return on equity for Raytheon is at minus 4.52%. And Lockheed Martin has a return on equity at 142.73%. Return on equity percentages are in the table, and with the highest value, Lockheed Martin gets 1 more point. 6th factor are the last 4 quarterly earnings results. When a company reports earnings, they are compared to expectations of analysts, so earnings can either beat expectations, meet them, or miss them. We will consider that beating expectations is a +1, meeting +0.5, and missing 0. Then we sum the results up to a minimum of 0 and a maximum of 4, and in the end, the stock with the highest sum gets a point for this factor. We have quarterly earnings for Boeing, and Q2 of 2020 missed expectations, Q3 beat, Q4 missed expectations, and Q1 of 2021 missed. So with 1 beat and 3 misses in quarterly earnings, we get a sum of 1. Quarterly earnings for Raytheon Technologies, and Q2 of 2020 beat expectations, Q3 beat, Q4 beat expectations, and Q1 of 2021 beat. So with 4 beats in quarterly earnings, we get a sum of 4. Quarterly earnings for Lockheed Martin, and Q2 of 2020 beat expectations, Q3 beat, Q4 beat expectations, and Q1 of 2021 beat. So with 4 beats in quarterly earnings, we again get a sum of 4. Results for the last 4 quarterly earnings factor are in the table, and with sums of 4, both Raytheon Technologies and Lockheed Martin each gets a point. 7th factor is the current ratio. It is calculated by taking the current assets and dividing them by the current liabilities. As investors, we want to find that the company is able to cover its debts with assets, but also that they are actually being leveraged. So in the end, the stock with the highest current ratio under 3 gets a point for this factor. Boeing has a current ratio at 1.33. Current ratio for Raytheon Technologies is at 1.17. And Lockheed Martin has a current ratio at 1.38. Current ratios are in the table, and with the highest value under 3, Lockheed Martin gets another point. The last factor is the dividend yield. It is calculated by taking the annual dividend per share and dividing it by the share price. A high dividend yield may suggest that profits are being shared with shareholders, and that is a great passive income source that we as investors are looking for. So in the end, the stock with the highest dividend yield percentage gets a point for this factor. Boeing is currently not paying any dividend. Annual dividend for Raytheon Technologies is at $2.04 per share, which is a yield of 2.35%. Lockheed Martin is paying an annual dividend of $10.40 per share, which is a yield of 2.73%. Dividend yields are in the table, and with the highest percentage, Lockheed Martin gets 1 more point. We can calculate the results, so Boeing has 0 points, Raytheon Technologies 2, and Lockheed Martin 7. This means that with a result of 7 points, Lockheed Martin is considered the winner of this comparison. And that was it. If you got value or new ideas, then make sure to push that thumbs up, it helps the channel a lot. Now there is a question for you: are you buying into any of the aerospace and defense names? Share your best picks in a comment below. If you are interested to know exactly when I buy or sell in a stock, then consider the options on Patreon. By becoming a patron, you will get access to Discord and get notified on any buys and sells that I do exactly at the time that I do it. This could be a good option to track my moves closely. Last week I did a comparison on solar industry companies with First Solar, Canadian Solar and Jinko Solar. And we also have 45 weeks worth of investing in the public stock portfolio. If you are interested in any of these, then click on a video currently on the screen. And that was it from my side. Thank you for watching, and I will be seeing you all in the next one.